Hello everyone, welcome to the Full Market Analysis Volume 6. So the same thing that we did in the last series, we just essentially look at the pairs that we're watching, and the highlighted pairs that are in yellow will provide a separate video because these are our watch list for the next trading week. But as we begin before we begin this video, the link in the description, we have a trading group. Highly recommend you just go ahead and check that out. This will give you a bit more information and a bit more updates through each of the pairs that we watch. Again, it just saves you the time from watching our videos just day in, day out. But obviously it's an additional, but if you do enjoy the videos, then obviously continue. But I'd highly suggest you check that out. So before we get through all of the pairs, we'll just start off with GBP and we'll work our way down to the bottom to USD Chef. Okay, so starting off with this pair, again, we can see the structure to the downside. We are just waiting for the pullback into this zone. And we're just staying patient really here. So we see one rejection, 2, 3, 4, 5. So a clear area of zone rejection, as now support has become resistance one time. So our next step is to see if we can pull back into this range and fall to the downside. Again, we're looking for that wick rejection that we talk about in all of our videos, something like this, and a bearish momentum to the downside as we are looking for sells. So the range that we are paying interest in is between 1.24397, 1.24058. So again, we'll be checking these charts, and if you want to place these on your charts and place alerts when price gets to this point, I'd highly recommend you do that, as that's what we do as our system. So moving on to GBP Swiss Franc. Again, we're looking for the momentum to the downside again. As we can see, broken of our uptrend structure. We can see downwards momentum and slow retracement to the upside. So again, this is the pullback phase. We can see here quite nicely that we've started to come to the downside, but we're not really seeing the exact momentum that we are looking for. So again, looking for the pullback and again a momentum to the downside. If we do find that, again, confidence in this pair that this could drop. The range that we're looking at is between 1.206496 to 1.20355. So again, put those into your charts. Just to save myself being repetitive all the time, all the zones that we talk about, I'd highly recommend you to place them in your charts and place alerts just in case that price gets into here. And then what I'd recommend you do is to study the price pattern if price manages to get back in, because not all the time price manages to retrace to our zones that we pay interest to, as these zones are ideas of where price is likely to pull back. They're not guaranteed. So just to clear up a bit of just to avoid a bit of confusion for yourself, that markets are not always expected to come into our zone. It's just a high probable idea that it could potentially get into the zone. So just keep that in mind, and again, put these zones into your chart. So looking at GA, we've been talking about ranging in this market for a long time now. If you have been starting from the series 1, volume 1, we've talked about getting into this range and bouncing in and out, but we've actually broke out, and it wasn't until properly the 22nd of April, so it was last trading week. And again, we're slowly making a descent to the downside. However, what I will be looking for is, even the market structure is pushing low, I'm not going to take a trade to the downside unless we get some more momentum here, as I do believe that this push, because from this point it's just been selling on all the way down, so I do believe that we could be retracing back up. So a potential push and drop to the downside, pull back into our zone, is a probable factor if we can break this zone here. If we close above this zone at 1.94611, wait for that pullback, stay patient, and again we could start to see some momentum into the upside and present some nice buying opportunities. Again, because we've been pulling all the way down, there is a requirement for the market to again reach its fair price and find that you know the buying value of the pound against the Aussie dollar. So again, stay patient and keep your eye out for that zone. But as it currently stands, we are in a bearish market. We're just waiting for that pullback in the long run. So looking at GBP Canadian dollar, coming into our zone that we are looking into. So again, just a short downtrend here. Until we break above this zone and until we break over this touch here at 1.75, that's when we will start to look for some buying opportunities. But for now, my bias is towards a pullback into this range, which we have done so here. And we've ended with a nice rejection candle here. So all we need to do is stay patient and wait for, again, a bearish momentum candle to the downside, and we could be looking for a further push lower. So that is between 1.74303 to 1.74040. Okay, so moving on to GBP JPY. As you can see, most of the pound pairs are in a downtrend. It's just a matter of picking the right trade to take at the right time again. So what we can see here is we had the huge push to the downside, a distribution of trades and of buys and sells within this range here. So looking to see if we can pull back into this range here. So 133.955 to 133.597. If we can get that great pullback into this range, test this current high on the 4-hour time frame, we could be looking for, again, that wick rejection here. Sorry, that was a violent one. So a rejection in this area followed by a bearish momentum to the downside. That would be a great selling opportunity. If we go above this level here, if we go above this zone here, we'll be looking for some buying opportunities. So just take precaution as price may extend further above this zone, and if we do, we will be looking for buys. But again, all these opportunities that we talk about will be presented in a video form, in a short analysis video, not in a not in a long-winded video like this, but like a 2-minute video like we typically do. So looking at Euro GBP, we can see that we've had that push to the downside, broken of the upside, and again, look at the momentum candle. Look what the candles are actually telling you. They're looking to push up, and we've got a wick rejection, so signs of exhaustion. So again, looking for that momentum to the upside, and we're looking for the push to the downside now. So as we can draw here, again, a break to the downside. So we're in our zone here, and what we are looking for is a bias of a downwards momentum, a pullback, and again a push to the downside. So the range that we are paying interest to is 0.87705 to 0.87484. Again, this is all very repetitive, I do understand, but again, what you should be taking away from this is just the updated zones that we do have, and looking at these areas of interest. This is an example video of what we are placing our zones in. Of course, you can place your zones at different areas of locations, but there's a lot more reasons that go behind placing our zones. So again, please use this video with your own discretion and put your own thoughts and opinions together. This is simply what we're looking at. Again, all the updates and zones that we look at are updated every day. If anything happens, we post these in the private Telegram group chat. As we mentioned at the start of the video, the link is in the description. I highly recommend you to join that. Again, it's just a bit more information and a bit more clarity, and there's a lot of people benefiting from these different types of zones and updates that we provide. So again, hopefully I can help you do the same thing again. So with gold, we actually posted a video on this, I do believe, at the end of the week. The structure and the zone still holds. Again, I'd highly recommend you to check that out. But for the time being, the zone that we are watching is between 1705 to 1699. and again wait for that pullback, and then the exhaustion phase within the zone, and then the push to the upside. So again, check that particular video out if you would like some more clarity on that. Euro USD, we are looking for bearish momentum to the downside. Again, we have to see if exhaustion is again propping to the downside, but we can see that we've had some strong momentum to the upside. So even though the market is currently in a nice bearish market, we could start to see early in the trading week a nice push to the upside. If we do break above this zone here, then we will be looking for some buying opportunities. So again, make sure that the 4-hour closures are above this zone before we can consider buys. Again, waiting for that pullback and then a push to the upside. So we will put a video out again if there is a change in this pair and in the bias. But for the time being, we are still in a bearish market. So again, we will see exactly how market opens next week. So Aussie dollar to the US dollar, we are essentially looking for an upside move still. The pressure is slowly pushing up. Again, we're coming into our zone, so we just need to wait and find strong momentum to the upside following the pullback if possible, and then push to the upside. If we could get into that, that would be great. So the 4-hour closure must be above this. This is not exactly valid. I want to see a strong closure. Again, it's all about the sentiment and the patterns that print within the zone that you want to pay attention to. So this is at 0.63961 to 0.63778. Again, all patience. There's nothing more to it. A lot of sitting on your hands, but you know it pays forward. I'd rather personally put one of a few trades in as opposed to multiple trades and blowing your account. So it's all about that different things really. So looking at New Zealand dollar to the US dollar, we can see the push to the downside, structure change to the upside, so very jagged movement here. So we're in a range bound, but we still capitalize on a short-term move. If we can see that we've had the push to the upside, had a pullback, we're on an up range. So if we close above this level here, which is at 0.60411, if we do get that, we get a push, and if we can get a pullback within this range and find some exhaustion, then we'll see a push to the upside, and then that will be a good sign to buy. So that is 0.60063 to 0.59938. So again, looking at the push to the upside is our momentum, and we are waiting for that exhaustion phase to continue within that area. So again, stay patient and look forward towards it. So moving on to euro to the New Zealand dollar, we see that downside move. Again, we've been stuck in this range for a very, very long time. We see a nice triple bottom forming here. I will still not be taking this trade for a buy, even though that we could see a triple bottom. Again, I do understand that that pattern is very powerful to take. However, I'm sticking to my guns and staying in, always in a trending market. That's how the pattern works. But for the time being, until the market breaks out of this direction or again up to the upside, I will be considering a trade this particular pair. But again, personal preference. I'm just going to stay out of euro, New Zealand dollar for the time being until we get a breakout. Similarly with US dollar to the Japanese yen, we can see we've been ranging in this area for a long time now. So the 14th of April, just not been sticking out or pushing out to the upside as 108, ranging between 108 and 107. So for the time being, the bias is towards the upside, waiting for the pullback and then the push to the upside with that momentum. Unfortunately, we just couldn't really find it properly, but again, range in markets is a personal preference. If you'd rather wait until a breakout, then again, it's still perfectly valid, but you can still trade a market like this if it's on a short time frame, not something as like a GA or Euro New Zealand dollar, as that's a very wide range. Something like this as a range market is a worthy potential to get in on a trade, because if we get in here at a low point and find that the market moves in our favor, we've got all that move to capture to the upside. But again, if it loses, we only lose on the low point of this zone from from the 14th or 15th of April. So you don't actually lose too much. But if you were to get caught in between, you'll be fighting the market, and that's not what you want to be doing. Okay, so just stay precautious and understand a bit more about range in markets. So again, this is what I mean by range on a wide time frame. This is an example of a market that we wouldn't consider to trade. As you can see, we're just floating in between. You can imagine if you were to get in here, you'd have, you wouldn't have been able to capture some nice long-term moves. But again, it's all about personal preference, nothing to it. You can still apply the method, but again, I'm not going to show you anything that I wouldn't trade. So again, stay patient. Don't fight the markets. Only move on to the next pair if you're not sure. So probably my best advice, really. Euro, Japanese yen, we'll post a video on that tomorrow. Nothing for that we want to cover in today, because we want to show you the exact entry that we're looking to show you guys. So stay posted for tomorrow. New Zealand dollar to the Japanese yen, similar to Canadian to the Japanese yen, just range market. Again, you know what to do with the range market. Personal preference, I personally will leave this. Aussie dollar to the Japanese yen. Now this is a tricky one, because we can start to see a triple top being formed here with wick rejection. So this zone is a clear sign of of a zone rejection here. So the current bias is towards the upside, and for me to get in on this pair, I want to see a strong momentum candle to the upside, because if we do break that fundamentally says that we've broken above this price action where it's been stalling since the 10th or the 9th of April. And if we do get that pullback, wait for some signs of exhaustion, and if we do find that, then we can see that we could potentially have a market pushing further high and eventually break that 69.301 high. So again, this area is between 68.951 to 68.635. Sorry if I'm talking too fast. Just want to try get as much as we can and keep it as short as possible, so that again, this is not too boring, because I do understand how monotone my voice is, but apologies for that. I hope it's all going through and making sense to you guys, that this is all just very repetitive. That's all trading is. It's just repeating the process. Once you get your process correct, there's nothing more that follows. It's just a matter of personal discipline and mental work that needs to go on. So so again, US dollar to the Swiss franc, this is our last video that we will cover. Euro to the Canadian dollar is the video that we will be posting tomorrow. Again, this is for an entry point that we are looking to consider for next week, as it's going into our watch list. So again, stay tuned for that. So this pair, before we finish off, is between 0.97433 to 0.97184. Again, you know what to do. You want to see that pullback here. Find that wick rejection. We did have that one here, but momentum is towards the downside. So again, we need to wait for another candle to form in this zone of a wick rejection, highly preferable. But then we want to see next to it a bullish momentum to the upside. If we do get that, that'd be great. Again, that's a push to the upside, and momentum is still in this market, and we could push further higher and higher up. So again, that's all that is that we are looking for. If we do have any updates on any of these pairs, what we'll do was, of course, we'll post a video to explain all the intricacies of the zone that we are updating. So make sure you subscribe to the YouTube channel for that. If you'd like to have a bit more information of trading, because you want to take trading a bit more serious, I'd highly recommend you to join the Telegram group chat. The link is in the description. Only those who can see that link and actually click that link will be able to access that group. It's not a public group, so it's a very private one. Until I remove that link or change it, that's it. That group will be closed. So I highly recommend you to check that out. And again, if you do have Instagram, I'd highly recommend you to follow me again. It's just all about, establishing, any questions that you do have, you can come forward towards me. I'm happy to help anyone regarding your own experience of trading. It doesn't matter to me. I'm here to help people. This is why we have all these YouTube videos and the Instagram posts. It's just different amount of content, but again, if you do want to talk to me, get in contact at KMTRADERS. The link is in the description also. And finally, if you haven't done so already, I really do appreciate you watching this video all the way through if you did manage to get to here. I would appreciate a subscribe if you could, just to keep up on top of your own trading and all of our analysis video updates. So thank you very much for listening, and I'll see you in the next one.